Says here it's live streamed.
Yep. Hey. So there's probably, let's see.
Didn't you have a full head of hair last time I saw you?
That must have been a long time ago.
I'm kidding.
Man, I got a full face of hair.
Yeah.
So I should swipe.
We just turn you upside down, you'd be all set.
Just swiped it out. All right, so this is going to be a great surprise. So there's going to be, should be some other folks that chime in.
So how do people find out about this to go on?
So for me personally, I go to Eventbrite, and I have 2,000 people that's in my database that I automatically send an email out to.
And what's the invite for?
Hump Day Real Estate with Kendell, DMV. And and it depends on the topic. I didn't really have a topic for this one.
Let me close my door real quick. My wife's got TV going.
No problem.
That's good. I just don't want other people to hear it. Well, I'm going to take your lead. You just ask questions or lead me into something, if you know, whatever you want me to do.
Yeah, so this
We could
one's
talk
gonna,
about some of the special financing programs out there. We could talk about what's happening with the interest rates. We could talk about.
so
Yeah.
this one's going to be a little different because I walk you into a dungeon. Okay, so there should be 2 or 3 other lenders coming on here. So we're gonna do some. Each one of you get to give a little information about what you do and some other things, so that people have kind of a comparison.
Okay.
Just like what normally supposed to happen, right? Quote unquote, the buyers can get to talk to 2 or 3 different lenders. Well, tonight they get to talk to, if the other folks get on. So if not, then you're the man.
I'm hoping they don't.
You're the man.
I'm hoping they're at the dinner tables.
That could be possible, because nobody else, all the people that told me they were getting on, and then nobody, and the last person I just gave, made sure I had the information. I don't see anybody else in the waiting room. Oh, somebody just came in. That's probably Jerry. Is that Jerry? Somebody said text. I don't know why I let that person in.
That's me.
That's Jerry.
No, that's Laura.
That's Laura. Hey, Laura. Hey, so I'm going to start at 7 o'clock. Let's do this. We are back once again, Hump Day Real Estate with Kendell, DMV. And so tonight I have something, people are popping in. Tonight I have something wild and crazy for you guys. Normally, when you hear about folks, buyers looking to buy a home, they tell you get, you can have multiple agents, multiple loan officers, talk to multiple loan officers. So guess what we have here tonight? We have multiple loan officers. Crap, what did I do? That you guys can hear from and get some information from. So first, person that was on the line tonight is Mr. Craig. Craig, tell us who you are. Tell us what
Yes,
you
sir.
do.
My name is Craig Smolen. I am the president of Advantage Star Mortgage. We're located right here in Maryland. We service Maryland, Virginia, DC, Florida, Pennsylvania, and I've been in business for about 12 years. We specialize in all levels of credit, anywhere from the lower credit scores up to the highest credit scores. We like to help everybody. We specialize in a lot of unique type of loans. Example of a couple of those is we do down payment assistance loans where you can get 100% financing. We have no doc loans for investors, as well as FHA, VA, conventional, USDA, just about every type of loan out there that's available, we offer.
Okay. So now, is there anything, is there any loan that you can't touch? So the other day I did a show with physician loans and stuff like that. Do you have any products like that?
Don't have anything specific for physicians, but we're always looking for new types of loans out there. We're always kind of searching out there. If there's anything available, we'll find it. We do a lot of stuff for investors, such as with the no doc loans, or several different types. There's bank statement loans, there's 1099 loans, there's actual true no doc loans with no income qualifications whatsoever. So we're always trying to find those niche products, as well as having all the standard products that are available.
Gotcha. Thank you. Thank you. Laura, you're up next.
Well, good evening, Marcellus. Good to see you again.
As always.
So my name's Laura.fournier. I am with Nations Lending. We are a nationwide company, but we operate like a small boutique because I'm local, and everything is done in-house, from underwriting, processing, funding, and we service our loan portfolio. And I really like to work with first-time home buyers to inform and educate them on the loan process so they can enjoy a smooth experience. And I do this by working through challenges with calm determination and finding solutions which overcome their obstacles and lead to successful closings. So we also work with self-employed borrowers, and we like to show them all of the products that they have available to overcome their challenges. They've been vastly underserved for the last 14 years, and there's a lot of good programs out there to help them overcome the challenge of tax returns. So we don't have to use tax returns. We can use bank statements or 1099s. And we present solutions for them that, maximize their tax deductions, keep their down payment low, maybe restructure their finances, and all sorts of good solutions for the problems that they face.
Now, Laura, what about physician loans? Any outside medical loans or anything like that?
Right now, we are not doing the doctor loan. We have in the past, and hopefully they will bring that back for us. But right now, we do not have that niche product.
Mr. Jerry, you're up next. Tell us a little bit about yourself and what you got going on. Uh-oh, wait a minute. You got to unmute. There you go.
Right. All right. So my name is Jerry Edwards. I'm with Fulton Mortgage. We are a pretty decent sized bank, but we have more of a community feel. We're licensed. I'm licensed in Virginia, DC, Maryland, Delaware, PA, and Jersey. I am focused primarily on first-time home buyers. Definitely like enjoying helping them achieve their goals, educating them throughout the process. We are a bank, so a little bit more conservative on some of the things that we do. So we don't offer bank statement loans, and our credit score requirements maybe a little bit more higher than your branch managers and brokers and things. But we have some pretty unique products that we bring to the table. Access to a boatload of down payment assistance options for individuals. We do, of course, the personal side those individuals who are 1099 as well. We do have a medical professional loan that we do offer. And we also have some other boutique options, such as 100% financing, which is a conventional loan program that we offer with no PMI. We also have a product, for those individuals who pretty new to credit or just I don't have any credit at all, where we can use rental history, non-traditional trade lines. It's a portfolio program that we offer. So if someone has rental history for the last 12 months, they can use a cell phone bill, they can use, they can use their utility bills, they can use a Netflix account, Hulu account, gym membership. So there's definitely some unique ways that we can help people here at Folsom.
Gotcha. We appreciate that. Now, Craig, what are
Yes,
you
sir.
seeing out there as far as interest rate? What is the last loan you locked in the rate on it? And what are you seeing?
Yeah, interest rates right now are trending in the mid to upper 6% range, depending on credit qualifications. It's depends day to day, to be honest with you. It's changing daily. So what we see today may be different
Right.
tomorrow. It seems like it has settled down a little bit. It doesn't seem to be increasing as fast as it did before. You're seeing some creative loans out there because of it. For example, they now have a 2-1 buy down loan, which means that, let's say the rate today is 6.875%. Buyers can get a 4.875% rate for the first year, 5.875% for the second year, and then we go to the full rate. The hopes being that down the road, rates will drop again. At that point, they can refinance the house. So that's another creative way to keep your payments down, initially getting into a home.
Gotcha. Appreciate that. Laura, what are you seeing out there as far as interest rates? Are you in comparison to what Craig is speaking about? Or?
Definitely in that range. The last loan I'm locked was a Maryland mortgage program loan, and that was at 7%. Now the Maryland mortgage program, they price the loan. It's whatever the rate is on their rate sheet the day that you register the file. So today, I think on a different program, because this group isn't a first-time home buyer, it was at 7.25%. But you can just go to their website, Maryland Mortgage Program, and you'll see the rate. They just post it right there, and it's whatever the rate is when we register the loan file. But yeah, definitely rates have more than doubled since the beginning of the year. So it's been the highest and most rapid increase in interest rates in probably the history of interest rates.
Now
40, 50 years, I don't know.
Are you doing the buy downs? Have you done any or the 2-1 buy downs or anything?
We have the 2-1 buy down on FHA or the 3-2-1 buy down available on conventional. So definitely price it up for the client to show them. You have to qualify at the full note rate. So it does not help with qualifying, but it does help them transition into the house by, graduating that step up payment over the first couple years. And if we get a chance to refinance them, that balance that is left on that the buy down that goes into the escrow is usable towards their refinance. So the money doesn't get spent. It sits there for them to use if refinancing comes available for them. So that's a little bit of bonus, but the money has to come from the seller. So you got to get Marcellus to negotiate that contract for you and get that seller help.
So with you being on that, let me ask this question. Now, I think we may have talked about this, but does that buy down has to be, and is it included within the max of seller concession that can be?
It is included in the maximum. So on a 3 or 5% down, you get 3% seller help by guideline. If you're putting down 10, then you can get up to 6% by guideline. So definitely, you would want to look at the options there. The 3-2-1 buy down is fairly expensive. So the 2-1 is probably going to be the one we'll see used a little bit more because of the cost.
Gotcha. Appreciate you. Mr. Jerry, what are you saying out there as far as rates? What have you locked lately?
I mean, it's pretty much the same thing. I mean, it all depends on the loan program. You know, FHA tends to be, you know, lower than conventional, you know, traditionally. But, you know, it all depends on the loan program. So some of the boutique options, like, you know, someone today, we did have him with the rate buy down because he was getting a bunch of funds. But he wants to do some changes on that. But initially, the rate was 7.375. That was our 100% financing. It is a little bit more inflated than your traditional, you know, conventional or even home ready, because it does have 100% financing. It also has no mortgage insurance. But, you know, there's ways we can compensate for that with some of our in-house options and other grants that we offer. But overall, the rates, you know, the rates are the rates. At the end of the day, you know,
That is true.
At the end of the day, you know, you go from one institution to another institution, the rates are going to pretty much be very similar. I mean, you're not going to have massive variation in rates, you know, but we don't do the 2-1 buy down. I just kind of really actually learned about that program. We don't offer that here at Fulton, but there's ways that we can still work with individuals to try to buy their rate down. You know, we want to be able to, if we have some additional funds or we get some funds from the seller, like I said, our in-house grants that we offer that we can connect with people. So even 100% financing, saving people on a down payment, great way to use some of that extra savings to buy the rate down. So we're definitely still doing that. And it's good because, you know, people who don't have those options, you know, we have those options. So.
Well, Jerry, let's talk about with the 100% financing or any of the other products. What are we looking at for the closing costs? What is that? Do you have like a percentage around estimate of what that's costing folks these days?
I mean, it's you know, for conventional, I mean, I'm typically seeing, but this program has no PMI, so that's always a great thing as well. You know, usually on a conventional, I'm probably looking at an estimate of about 4% or so. And that's just an estimate. You know, of course, things may vary with taxes. If it's a full gut rehab, sometimes you got to estimate the taxes based off the tax rate here in Baltimore City. So that can kind of inflate some of the numbers. But that's traditionally kind of where you're at. So, I mean, usually when someone comes by, you know, we're talking about the 4%, including, you know, the closing costs plus their escrows. Of course, if their escrows are higher due to, like I mentioned, a full gut rehab, we have to use that tax rate. You know, that's where sometimes it may go above that. But that's kind of traditionally where we're looking at it.
Gotcha. Appreciate that. Craig, how about you with closing costs? What are you seeing as in most of the programs you're using? What was just to give
I mean,
the
you're
buyers?
looking on most loans, I would say, as an average between 3 and 4% is where our closing costs are. You know, most of the loans that we have, there's no points or origination fees. So it just keeps it to the third party closing costs and the escrow accounts. So they're, you know, they're as low as they can possibly be. Of course, seller help from you always helps to reduce those costs. And it seems like, you tell me if I'm wrong, but it seems like the market's heading back to that period where there's an ability to get seller help.
I'll tell you, I've been definitely getting a lot of seller help on deals as probably since August. It's been a lot more prevalent where, you know, getting 4%, 3%, or I got one deal where I was willing to give 6% on an FHA loan. I'm like, whoa, we'll take it.
Yeah.
So how about you, Laura? Are you in about the same range as you're seeing closing
Yeah,
costs?
I think most lenders have the same typical, you know, lending fees. You know, some of us don't itemize and other people do. But in general, the fees are pretty much the same from lender to lender. You know, then you have your title company and all of those fees. I mean, they're pretty static. Maryland is one of the highest states in the union, right behind California and New York. So it is higher than other states, but it's still, you know, in that range for sure. Some programs are definitely higher than others, like the portfolio programs, those no tax returns, those type of loans run more expensive than your FHA or conventional loans. And I think it also helps, like with the Maryland mortgage program, they save on some of the fees on that program.
Gotcha. Appreciate that. Craig, Adjustable rate mortgages, you have the buy down. Do you prefer that the client maybe get the buy down or look at adjustable rate mortgages these days?
So far, and we deal with multiple lenders, so we shop the rates around to many different places, but we're not finding so far that there's any really attractive adjustable rate mortgages. They're not significantly different than the fixed rates to make them attractive yet. We're hoping that would happen and happened in the past. But right now, the 2-1 buy down is really the best way to go if you're trying to get a better rate. They're just, I wish we had them, but they don't right now.
Gotcha.
Yeah, because we're suffering from the inverse yield curve where short-term rates are higher than long-term rates. So there's not the pricing on it yet.
Gotcha.
I think maybe I've heard of a bank or something out there that kind of has their own portfolio product. I heard about it the other day, but I haven't actually seen it or had somebody talk directly about it that knew about it.
Gotcha. Yeah. What about you, Jay?
Yeah, we've been seeing our adjustable rates are definitely going to be better than the fixed rate mortgages. It just depends on what that person's outlook on it is. A lot of times people are so afraid of the adjustable rate. We have to do just a lot of education around of how that works. You know, we do have the adjustable rates, so we have been utilizing them when they come about. We even have a portfolio option. I know one of the ones that you and I spoke about before, and we just started using that with an adjustable rate. So that's our Home Buyers Advantage, our portfolio program, where someone can have the limited to no credit. And it's been helping. I mean, we also have it reduced right now on even the regular rate. It usually trends, that particular program normally trends around where Home Ready normally trends as far as their interest rate. And that's right now like 7.5. But we were pretty much providing almost a full percentage point down on the rate on that program throughout the end of the year. And then we also added an adjustable to it. So now the rate can go even a little bit lower. So it all depends on the individual. Some, you know, I speak to people all the time about it and they just, you know, so afraid of that process. But also try to educate them on how long you're going to be not in the house, how long you're going to be in the mortgage. And industry standards is probably 5 to 8 years that most individuals are in that mortgage. So it's just about education for people, especially first-time home buyers.
So thank you. I appreciate that. So I hear all three of you guys saying closing costs in the 3 to 4% range. Is that still also the case when you're looking at some of the down payment assistance programs out there, especially some of the Baltimore City programs? Is it relatively still in that range?
Yeah, the closing cost doesn't change because they're getting a down payment assistance program. That's not going to really affect their closing costs as far as the percentage. So it's not really making that big of a difference because it's really helping the down payment assistance is helping them to reduce their out-of-pocket expenses so they don't have to come to the table with so much money. But we're not really, I don't see anything there's no additional fees, you know, that's going to really drastically increase it. Sometimes you may see, for example, Live Where You Work, they'll take the fees out of the funds that they get. You know, so it's not like charging them additional fees. So if there's any taxes that are coming out or whatever their fees are just coming out, and the only thing that they're really adding in is like recording fees, and that's not really moving the needle that much. You know, a $60 recording fee or something like, or a $200 application fee or whatever the case. It's not really moving the needle drastically. If that makes sense.
Gotcha. I appreciate that. Now, Craig, is that your understanding of where things are when you're doing down payment assistance? Or is it?
Yeah, I think ours may be a little bit different than the ones that they're referring to because our down payment assistance is not a state or county program.
Okay.
They're actually coming directly from the lender. So our down payment assistance is first loan and it's a second loan for the down payment. Both come from the same lender. They're both approved at the same time. So there's no first qualifying for one of these programs and then waiting for that to happen and then going to find a loan for the house. This is all done at the same time and it's all done completely within 30 days, but there is no effect on the closing costs when you qualify for these programs. So they're pretty simple to qualify. They're basically the same qualifications as a standard FHA loan.
Gotcha. How about you, Laura?
Yeah, the only extra fee is you're paying some transfer and recordation on the the second trust.
Good.
So, and that's, you know, a small amount, maybe it's 15,000 or 10,000, you know, whatever the 3, 4, or 5% of the sales price is for your second to cover your down payment and some closing costs. But yeah, it's nominal. And I think Maryland Mortgage Program has a $4.95 fee for the Maryland credit certificate. So it's very nominal to get that, you know, use that product for the client. And then it's really just net out of
Oh,
the money they're getting.
gotcha. So on your loans, especially with your down payment assistance, then I guess like I've seen on some other out-of-state down payment assistance program where they actually have like a 1.75% origination fee, which initially ends up taking that closing costs up to 5 or 6%. So you guys don't have those additional costs.
No.
No, I've never seen it before.
Gotcha. Okay.
Yes.
There's a couple other lenders out there that have their own down payment assistance programs, and that cost is what ends up being, in my opinion, the reason why most of the time the borrowers couldn't use that product, because then they still ended up having to come out of pocket with more money. You know, even if they are asking for 3 or 4% seller concession, they actually end up needing 6% or more in order to offset what that cost is costing them.
Yeah,
We had another program, but because of the pricing, it kind of just evaporated because it had some extra fees and it didn't make sense.
Yeah, I've heard of a program here. I know people use here in Maryland a lot, the Shanoa program, and that's kind of one of the programs where they were offering 4%, but they were charging you 2% to get it. So it was, you know, some of those type of programs just again, they don't make sense.
Gotcha. Now I bring, there's a buyer that's raising their hands. They got a 600 credit score. They have $12,000. They're looking to possibly buy a $280,000 house. Who can do that possibly deal?
That would be an easy one.
Yeah, we can do FHA down to 500. So
Yeah, that would definitely be an easy one. The other thing we do too to help our buyers is we can do free credit counseling, because we always hate these companies that charge money out there to help people to fix their credit. So we do all that for free, and we can do what's called rapid rescore. So we can actually rescore people's credit in 72 hours. So even if somebody came to me with a 600 credit score and I saw something real simple they could do to become a 640 or 660, and they even qualify at 600, I may suggest it to them just because I can get them better terms. So I'm always looking out for a way to make sure that we're getting the very best rates possible and giving the best advice, and not just going with exactly what they have right now. It's because it's a fast process. It's not like it takes 30 or 60 days to do anything with a credit. It's just a 72-hour process.
Gotcha.
yeah, and most good ethical lenders will do that. I mean, I saved a client a quarter percent on the interest rate, which was it was a pretty good sized loan, was almost $400 a month difference in the payment. And that was just rescoring her from a 680 to over a 700. So it can make good sense to do that for any of our customers that come to us and we see we can improve their credit. Because the higher your credit, the better the rate and better the mortgage insurance costs. So it behooves all of us to do what's best for our client and put their needs first and just get it done.
Thank you. I appreciate that. When do you guys want buyers to reach out to you? Craig, you go first on that.
Where to reach out to us?
Yeah.
Yeah, so they can call us. We're actually available pretty much 24/7. We have agents available because we know people work some crazy hours. So they can call us anytime from 7 a.m. till probably 11 p.m. You would be able to get somebody on the phone. And the number is 240-299-0644.
Gotcha. I appreciate that, Laura.
Well, right on my screen is my phone number, 301-674-7716. And if you'd like some free information that talks about mortgage and real estate terms, and also some links to some educational videos, just text me the word terms And I'll be sure to get that out to you quickly, and you can call me and I will get you started in the process. And we definitely have concierge service where we're holding your hand all the way through from beginning to end. We don't let you go even after you go to settlement because we service your loan and will be available to you. So no more 800 numbers. You'll just call myself or my team.
Laura got slick with that one, I'm gonna tell you. Jerry?
So my phone number is 410-499-0620. Really accessible on social media, text, call. Not open 24/7, but you can reach me pretty much at any time for the most part, just to follow up. If I don't follow up right away, then there's a reason, and I'll get right back to you. But I also do like Craig's company. We also offer, some of those free services as well for credit repair and things like that too. So we can help people get into these deals.
Well, I appreciate that. Last question. What are your guys feeling about this market? Craig, how do you feel about the market?
I think that there's going to be a little bit of period of adjustment, and I think people have to get used to the rates are more of the norm. People have to realize that when rates were 2%, 3%, even the low fours, it was artificial. The government was subsidizing a lot of that. And where rates are now are kind of back to a more normal place in the world. So there's going to be a little bit of an adjustment period for that. We hope they go down. We truly do. I hope something happens that brings the rates back down. But I think that everybody in the world just has to get used to the fact that this is probably a little bit more of a norm, maybe a little bit high on the high side. I would like to see rates come back down, at least settle down in the fives would be nice. Fours would be wonderful. But I think we just have to, everybody's got to get used to it. Really, it's just, it's where it's where it is. Nothing we can do.
Craig, give your contact number real quick before we go to Laura.
Sure, 240-299-0644.
Thank you, Laura.
I am definitely very optimistic about this market. There's a lot of good opportunities for buyers out there to negotiate a very good contract and to get some help for them to pay closing costs or to do one of those 2-1 buy downs or the 3-2-1 buy down. I believe that rates are in a historic average where we are right now. I bought my first home at 11%. So we're less, give or take half of that. So it's still very good. I think we'll probably see price appreciation still. They're calling for that in almost all markets. Builders, start permits and everything are down. So we are definitely having a housing shortage, which will continue to pressure house prices. So we will see appreciation. So buying a home is definitely an advantage. There's going to be money and wealth to be created in real estate. You have to, before you get your dream home, you have to get your first home. So don't let the naysayers and the negativity turn off the TV and buy a home. You have to live somewhere, pay your own mortgage, earn your own equity, and start building some wealth for your family. So definitely get in the game, and I'm happy to help you out with that.
Appreciate that, Laura. Jerry?
Yeah, pretty much, same thing everyone said. Right now, I think, we're definitely in that transitional period where it will be more of the norm. Obviously, we would like to see the rates, just like Craig said. I was thinking the same exact thing. I remember a couple months prior to COVID, I remember like Home Ready and some of the other boutique programs were just touching 5%, 5.25%. I remember locking a few loans in back in 19 at that. So we're not too far off of that. Obviously, we still have a couple of meetings to go through with the Fed this year. So we'll see how that reacts. It's going to be one of those situations where it's just about educating people, letting them know that it's always still a good time. Renting is 100% interest. And interest rates for home buying is around 6s to upper 7, 6s to 7. So it's still a good deal. Appreciation in homes are always going on. You know, we have a couple bubbles here and there, but, you know, creating wealth through real estate is always the key. It's always going to be the fastest way to building that wealth. So, you know, like the other, I forgot the name of that quick, because it says terms. I can't say terms, not a name.
That's the end,
Laura.
Laura.
Laura. Sorry, Laura.
That's okay.
But, you know, it's just a matter of, you know, getting through the process, you know, like you said, cutting stuff off, stop listening to all these gurus online and social media, and these people are killing me anyway.
They're not gurus. They're just talking
they're
heads.
just, I know everybody
Talking negativity.
talking negativity and all things wrong. I tell you that. You know, so overall, just I think overall, as long as we continue to do what we do it well and educate people, you know, it's just a matter of doing those things.
I agree.
I appreciate you all for coming on. And for folks out there, I do this every Wednesday at 7 p.m. This is the first time we've gone live without technical difficulties. So we're actually live on YouTube and live on Twitter. In the coming weeks, we should be fully live on Facebook and some other social media channels as well. But again, I thank you, Craig. Thank you, Laura. Thank you, Jerry. We're actually signing out. And again, we appreciate you. But this is the channel you can come to learn about all things real estate. Until next week, it's Hump Day Real Estate with Kendell, DMV, signing off. Thank
Nice
you all.
to meet you, fellas.
All right.
Thank you.
Go on.